3, 2, 1. Okay.
Hello, everybody. My name is Jackie Ovad. I'm a full-time realtor, have been a realtor for over 16 years, and I want to welcome you all to our homebuyer webinar. First of all, I want to congratulate you because you're here, and which means that you are already investing your time to get in knowledge about how to become a homeowner if you're not already a homeowner. So congratulations to all of you. And we are here with Brian Sachs with Homebridge. He will join us a little, he's here, but he's going to join us a little bit further into our home buyer seminar. So welcome all. The steps of using, we're going to start with the steps of using a buyer's agent. First, we're going to go through all these slides, and if you have any questions during our webinar, please feel free to use the chat box, and we will get back to you as soon as possible with that answer, okay? So establish your home buying goals. The way that analogy I use here is basically just think about first thing we're going to set up a meeting. We're going to set a meeting. I will share with you later on a link that you can schedule a 30-minute consultation. And during that home buyer goals, we're going to go through all your needs and wants, your must-have that you want in a house. Perhaps it's a basement, a garage. You want a specific school district, your location, your size, your number of bedroom and bathrooms, all those things that I'm sure you're very excited to share with me. We're going to go through all those steps during our initial 30-minute consultation call. So, and the next step will be to get pre-approved for a loan. When we say pre-approved for a loan, the analogy that I use is that just think about you being on an island. And I always use this because, and my clients always laugh at this analogy, but it's almost like you're stranded on an island and you know that there are a flight coming on sometime, but you need a ticket to get out of the island. So that pre-approval is to have your ticket in hand. So whenever that flight comes in, you don't know what the destination is going to be, which is your new home, your destination, but you have to have that ticket in hand. So it's very important to get a pre-approval so you're ready to go when that flight comes in and take you away from that island where you're currently are, which is you're renting right now. So that's an island. So that's an analogy that I have. It sounds funny, but everybody laughs at that. So the next step would be to view homes. That's the fun part when we go ahead and go and tour these beautiful homes. Right before doing that, I'm going to set you up, after we get the pre-approval, I'm going to set you up with an alert. An instant alert that will show you all the houses that are meeting the criteria that you're looking for. When they come on the market, you're going to receive immediately those alerts, and then you will let me know. You will pre-select the homes that you are interested in viewing, so I can schedule the showings of these homes. You can let me know your availability, what time of the day. We can schedule those showings, and then we go see those beautiful homes. As we're touring the homes, and you say to me, Jackie, I love this one. This is the one. Because, by the way, I'm also a matchmaker. Yes, I match my buyers to the perfect home, the home of their dreams. So that's another one of the hats that I wear. So you said, Jackie, let's make an offer on this property. And the next step, as you can see in the slide, is to make an offer. When we make an offer, that means that we prepare the whole contract of sale with all the addendums, and the only thing that will change there are all the blanks. That's the same contract of sales that every single agent that sells a property in the state of Maryland will use. The only thing that will change are the blanks, which are the amounts, the names, the addresses, and all those fun things. But we make an offer. Along with that offer will come the pre-approval letter that we talked about before, and also proof of your deposit money, the deposit check. That we can talk more about that when we do the consultation. We submit an offer, and once that offer is accepted, or the property of your choice is accepted, then we negotiate the best terms and price for that offer for the property you're considering buying. To finalize your financing, when we finalize the financing, that means after the house is been, the contract has been accepted, and that's when you actually get, at the beginning of the process, you get pre-approved for a loan. But once you get you have a ratified contract, that's when you will start the processing of financing that particular home that is already a ratified contract. So that's when you will contact again Brian, turn in all the documents. So I will send him a copy of the ratified contract, and we will start the financing process. The very important step, even though right now we have a very unique market, let's put it that way, which is a seller's market, where in most occasions, and it's very common to see that in order to get my buyer's offer accepted, we have to be creative. And one of the things that I see that is very common that is being waived is the home inspection is being sold. Properties are sold as is, which means that we are not requesting the sellers to make repairs. We're just doing the inspections for the knowledge of the buyers to know what is wrong with what it is, if there are any issues with the house. And I highly encourage, I always try to protect in every way that I can my buyers. So I know there are some agents out there, and I'm not naming anybody, but they will say, let's do as is without inspection, that I cannot sleep. I will not be able to sleep at night if I have my buyers investing in what could be the largest investment of a lifetime on buying a home without having a home inspection performed. So that's the one thing that we will do after we have a ratified contract, is to get a home inspected, even if it's only as is, we'd like to terminate, which means that we are not going to ask for any repairs, but we will find out everything about that house, because again, I want to sleep at night and I want you to sleep at night as well. So after we get the home inspected, and the next step will be the appraisal, because when you are purchasing a home and you're financing a home, the lender will require that house appraises at least for the sales price of the house, or the contract price of the house. So that will be through home, the lender that will be requested the appraisal, and that will be performed right after that. The final walkthrough, this is basically at the end of the process. Right before I hand you the keys to your home, we do the walkthrough. The walkthrough is scheduled, could be the same day of settlement or the day before, a few days before, depending on what is the situation. But it's basically to confirm that the house is in the same condition as it was when you submitted that offer, nothing has changed, or also to verify that if there are any negotiation regarding a repair, that those repairs have been completed by the sellers. And of course, I always protect my clients, and I have the sellers provide with receipts showing who did and performed the work that was requested through when we did a home inspection. And the last step is closing with your title company. That's the day of settlement. Very exciting. And that's when I hand you the keys to your home. We meet at a location which is already pre-established or pre-scheduled. The date of that will happen is to everybody's knowledge, because it's on the very first page of the contract. When we submit the offer, before I even write an offer, I will contact Brian, the lender, to make sure that that is a good date, a good time that we can write as the settlement date for our offer. So everybody knows that that will be the day of settlement. The only thing that we have to schedule is the location and the time of settlement, and of course agree with the title company with their availability. So what you will learn today: 3 advantages of using a buyer's agent. Most of you, and Brian will explain to you a little bit more about the advantages of using a buyer's agent, perhaps you're not aware of. The 3 types of lenders, on which one is best for you, how to get more money to pay for your mortgage, types of financing, in which one is best for you depending on your situation, how to buy a home even if you don't have perfect credit. I know that could be a very big concern. It's a very big concern for a lot of people, and most people, they don't realize that they have the power to become homeowners. But today, that's why you're here. Knowledge is power. So Costly mistakes to avoid when buying a home. The one document that increases your negotiating power. And plus you will learn a few more things about what is a title company, what is a title insurance, what do you need one, what is the difference between owners and lenders policy. And I can express more like how lucky you are to be right now in a good situation where you have a great lender and a great realtor and a great time to buy, because the if you're familiar with this market is a little bit crazy because of the it's a seller's market. And let me explain a little bit about that. It's because right now the interest rates are so low, so home buying is very affordable. So, but it's so important that is the reason why it's so important to invest in your family, because one of the reality checks is that when you become the net worth of a home buyer is 41 times larger than the net worth of somebody that is a renter. So you buying a home, you're investing in your family, you're investing in your legacy, in your kids, everybody, generational wealth by becoming a homeowner. And now, let me introduce you to who's ready to own a home now. Let me introduce you to the one and only Brian Sachs with Homebridge.
Thank you so much, Jackie. And, I'm just so thrilled because I really do see we have record attendance on this home buyer workshop. And as you said, it's so important to become knowledgeable. The process moves very quickly. And so the more knowledge you have, of course, Jackie and I are experts and have, really helped hundreds and thousands of families become homeowners and make that transition. But the more knowledge you have, the better decisions you make and the more pleasant the process is. So I want to welcome each and every one of you here. Some of you I knew were coming and sound very familiar, like Shamika and Tony and Julie and Markel. And I see lots of you here. And
yeah. Good thing that you mentioned that, Brian. I didn't realize how many people we have there. Oh my God, yes.
It's Sarah. A beautiful thing. Beautiful thing. So I want to do just a few housekeeping issues before I jump in. One of the things Jackie and I, sometimes when you're on a home buyer workshop, you feel like you're drinking water from a fire hydrant. It's all coming at you pretty quick. And so I want to make sure each of you now can look and see that Jackie and I spent some time putting slides together for you to be able to take notes. So while I'm doing this introduction, if you all want to download those slides and take notes, you will see the question box. Feel free to ask any questions. Sometimes we get such a volume of questions that there may be a little bit of a delay. We may actually get back to you after the workshop, but we will get back to you, and hopefully we can cover your question on this workshop. But just in case, so let's talk about the market in general, okay? The market in general right now, I've only been doing this for 35 years. It scares me to even say that. But, we are in a great, great market. It's a great opportunity for you to become a homeowner. And Jackie, you said it so perfectly. Owning a home for many families really creates generational wealth. It's that foundation that you really set, and that equity in that property can help generations after you. So truly, we're in a market where rents have been skyrocketing and home prices have been going up. Interest rates are very, very, very attractive. When we say attractive, it's all relative, right, Jackie? When I started, the interest rates were 18.5%. So, we're going to share with you today some really important tips. Again, feel free to ask the questions. By now, I hope all of you have downloaded the PDF of the slides. And if we're ready to jump in, we'll get started. So, it's always good to share what we're going to share with you. And one of the things we're going to share with you are the 3 types of lenders and which one might be best. I'm going to share with you how to get more take-home pay to pay your mortgage. We're going to talk about which types of financing is best. And I want to pause here for a second, because let me say this to you. All of your friends care a lot about your well-being. All of your relatives care a lot about your well-being. Hopefully your coworkers care a lot about your well-being. But I want to just share something with you that's going to sound a little bit strange, okay? But I'm going to put it in context for you. If, God forbid, I broke my toe just now, I'm not going to go to a dentist to get it fixed. So what do I mean by saying such a crazy statement? What I mean is that although the dentist is a doctor and the orthopedic doctor is a doctor, the orthopedic doctor can fix my toe. I'm not so sure the dentist can. Here's what happened. It's a good chuckle. I know it sounds a little crazy, but here's what happens. And let me tell you why I'm saying that. Oftentimes you will get advice from your friends, your family, your coworkers, and they will tell you, well, why don't you do this? And why don't you do that? And did you do that? And did you do this? And they mean well. And some of their advice actually may be good advice. But what was proper for them when they purchased may or may not be appropriate for you. And so one of the things that Jackie and I really pride ourselves on is making sure that we offer you a free, no obligation consultation so that we can answer and look at your specific situation and give you the proper options for your current situation. Now, some of you also go online. And if you go online, the information online is only as good as the people who put it up there. So you have to just be a little bit careful. So let's talk about how to buy a home even if you don't have perfect credit. Let me give you an interesting statistic. 60% of Americans, it's been estimated, have a credit score of 660 or below. So most of America, doesn't exactly have a perfect credit score, and you can buy a home even if you don't have perfect credit. And while Jackie and I are going to share lots of good information with you today, sometimes it's maybe even more important to figure out what not to do. I'll give you a case in point. Does that sound okay, Jackie?
Absolutely, yes.
All right. So I had some clients who were referred to me, and they were out last weekend and they were looking at homes, and they went into the property, and there was an agent in the property. Of course, it was an open house, and that agent, showed them the property. It was very nice, very sweet, and very competent, actually. And they called me the next day, really almost crying. They didn't understand what just happened to them. So let me explain. There are 2 types of agents, and Jackie explained this, but I'm going to go a little deeper. There are 2 types of agents. There is a buyer's agent who represents the buyer. There is a seller's agent known as a listing agent that represents the seller. So if you were like my clients and you walk into an open house and there's a very sweet person there and they're very competent, and let's say the house is listed for $250, and you say to the agent, gee, I really love this house. And the agent says, oh, great. You want to put in an offer? And you say, sure. So here's what you tell the agent. You say, we love this house and we know it's listed for $250. We want to come in at $240, but you know what? We love this house so much, we would go up to $260 if we had to. So guess what, folks? And if you're driving, listening and watching our workshop, pull over, because what I'm going to tell you is going to shock you. Okay? If you're standing, please sit down. That agent has to go to that seller. And you know what that agent has to say? Mr. or Mr. and Mrs. Seller, do not accept this offer. This buyer is putting in an offer of 240, but they have verbally told me they will go up to 260. Do not take this offer. Go ahead, Jackie.
They are the listing agent. They are representing the listing, the seller. Their job is to protect the seller's best interest.
Exactly.
Buyer's agent protect the buyer's best interest.
Exactly. And that's what happened to my poor clients. And so that's why I referred those clients to you, Jackie, because they need a buyer's agent. They need someone looking out for their interests, negotiating on their behalf, and making sure that they get the best situation for themselves. And folks, you're probably saying, well, gee, how much is that going to cost me? That's a good question, right? The reality is that the seller pays the commission to both agents. And so that's not something I would worry about. There may be a small administrative fee you have to pay, but the seller pays the commissions for both agents. So really almost costs you just about nothing to engage Jackie as a buyer's agent. And that's what you should do. So that's a mistake to avoid, by the way. And we're going to talk about a bunch of them. The one document that increases your negotiating power. So what I find, folks, is that, and again, take notes on your slide handouts. And if you have questions, type them in the box. We'll do our best to get to some, or we'll get to all of them at some point, but we'll do our best to get to them on our session here. But the top 5 reasons I find that people rent are they're new to the area and they're really just trying to get their bearings, or they don't have enough, they think they don't have enough money for down payment and closing costs. We're going to fix that. Maybe they've had past credit issues, including a bankruptcy or a foreclosure. We're going to fix that one too. They think it's too hard to qualify for a mortgage loan. Actually, it's gotten much easier, to be honest. And number 5, they think they can't afford a mortgage payment. Well, the reality is, and I actually, if my voice sounds familiar to you, I've had radio shows in Baltimore for the last 20 some years on CBS and various other stations, CBM, but I'm also on Channel 11 as their in-house mortgage expert. And I'm not telling you that for any other reason other than it's important to know who you're listening to, right? Jackie and I have many, many years of experience. But on Channel 11 recently, I did some research, and you know what I found? Baltimore, the Baltimore, Washington area, they did a study of what cities in America it's actually cheaper to own than it is to rent. And that's based on, how much rental prices have gone up. Baltimore and Silver Spring were in the top 5 areas in the United States of America where it's actually cheaper to own a home than it is to rent. So that's aside from, taking advantage of all the equity you're going to build up in a property. It's just, cheaper. Go ahead, Jackie.
No, I was going to say that if you, if everybody that's renting would do the math and just say, first of all, why pay the landlord's mortgage when you can pay your own? But it's so painful to see also renters that they don't, if you do the math and you multiply your rent times 12, how much you have thrown away in 1 year, and then you multiply that by the number of years you've been renting, you could have been way down with a down payment on a beautiful home and perhaps paying much less than what you're paying monthly in renting a home than owning it.
Absolutely right. And, to make you all feel a little better, if you do have a credit challenge, I actually wrote the book on the topic right there called Yes, You Can Get a Mortgage. Not a very flattering side view of me, but it is what it is. So there we go. Let's talk about some of the various types of programs. And folks, I just want to remind you again, this is not meant to give you personally an in-depth, detail about every single program, because really what Jackie and I want to do is make sure that when you have your free, no obligation consultation with us, that we're looking at your situation and addressing your concerns and finding out what your comfort levels are. But it's good to have a little bit of an overview. So let's talk about the major programs out there. You may have heard of FHA. That is the Federal Housing Administration. And the FHA was created actually to encourage and make it easy for Americans to purchase a home. They do that by being very flexible in their credit standards. They do it by being very flexible in the amount you qualify for. They do it by allowing you to put down as little as 3.5%. The downside is that obviously you have to work with an approved lender. Homebridge Financial, the company I work for, is a national direct mortgage lender that is able to do VA, Fannie Mae, Freddie Mac, USDA, and FHA loans in-house. The appraisal standards are a little bit stricter, and FHA does have what's called a mortgage insurance, and that insurance protects the lender in case a buyer doesn't pay. It's a little bit more expensive than a conventional loan, but again, all of these programs are going to have pros and cons. One of the programs I neglected to put up here in the slides, I'll just cover very briefly. It's the USDA program. And the USDA program allows you to buy a home with no money down. The problem is there are income limits, and not every home is eligible for the USDA program. So, for example, if you're looking at Baltimore City, there are no homes available in Baltimore City that can go USDA. It's rural housing. If you're looking at Mount Airy, Maryland, well, there probably may be some homes. Or if you're looking in PG County, in Accokeek or Charles County. I don't want to go too deep into USDA, but if you are looking for rural properties, USDA may be an option. Let's talk about the VA loans. You know, it's a good thing that we honor our veterans, because we wouldn't be here if we didn't have those who defend us to thank for our freedoms. And the VA program, if you are a veteran or if you have done 6 years of reserves, or you are the widow or widower of a veteran, sometimes you can qualify. But the beauty here is very liberal guidelines. They allow you to qualify for a little bit more home. There is zero down payment, zero. Nice round number. And VA does have a funding fee. It's like that mortgage insurance. And just a great program, probably the easiest type of program as long as you are a veteran or an eligible reservist. And by the way, that VA benefit, that's something that you can use multiple times. Most of the VA benefits, you use it and you're done. But with the VA home loan, you can use it as many times as you like. So we're going to talk about now the conventional loans. Conventional, you may have heard of Fannie Mae or Freddie Mac. These are the companies that they're semi-government agencies, and they purchase these loans on the secondary market. This is what we would call just a standard conventional loan. They are going to be a little bit stricter with credit standards. They probably will qualify for a little less home than you would on an FHA or a VA. You can use the program with as little as 3% down, but generally the standard is 5% down. And, they're a little bit more liberal with the appraisal standards, but they're a little tougher with qualifying the buyer. So which program's right? Honestly, what might be right for you, Shanika, might be wrong for you, Tony. So it really, it just depends. So myth number one, I don't have cash. Well, which one of these is right, folks? I can't purchase a home because I don't have a lot of money for down payment and settlement. Well, how much do you need? 5%, 10%, 20%, maybe 0%. All of these answers are correct, and all of them can be incorrect because it depends on the program. The reality is, I want to just share with you first what there are really two buckets in terms of the amount of money you need. I want you to just picture two buckets in front of you. One of them is your down payment, and your down payment, again, could be as little as 0%, could be 3%, 3.5%, 5%, but the minimum on an FHA, again, is 3.5%. The minimum on a VA or USDA is 0%. So that's one bucket. That's your down payment. Your other bucket we're going to talk about are your closing costs. And I want to break these down for you a little bit. There really are there's actually four buckets here, four little sub buckets, if you will. There are lender charges. Lender charges are appraisal, credit report, underwriting, processing, flood certification. There are title company charges, and Jackie will assist you in vetting the title companies. She works with some of the top title companies in the area, and Jackie's expertise comes in right here in putting you in touch with one of those title companies. The title company will actually review the title to the property. They do what's called a title examination to make sure the seller is able to sell you that property free and clear. They will issue owners and lenders title insurance. They will record the new mortgage. They will also be the ones conducting the settlement. And then there are prepaid items. You're going to have fire insurance. You're going to have property taxes. In Maryland, they are paid 6 months in advance. They're paid mostly semi-annually. And the thing that is not on here are what are called state and local transfer taxes. If you are a first-time buyer in the state of Maryland, meaning you have never, ever had your name on the title to a property in the state of Maryland, there's a little bit of a discount that you get, and Jackie and I will share that with you when we speak. But you have to be aware of all these things. In Maryland, and I'm going to give you just a very rough approximation here, generally the closing costs, and I'll see if you agree with this, Jackie, they're generally in the 4 to 4.5% range. Does that sound reasonable?
Yeah, exactly. Yeah, that's exactly what I explain to my clients.
Right.
Yeah, our clients. Yeah.
So on a $100,000 house, closing costs roughly $400 to $4,500. Just so you have an idea. Now the question becomes, well, what if I don't have enough money for down payment and closing costs? So I'll share with you some ideas that some of my clients have used. Oftentimes they get a gift from a relative. I bet you didn't know this, folks. Do you know a lender can actually give you some of that money? When I say give, that's not actually the right word. There are ways where we can structure it as a lender where your payment might be a little bit higher, but we can give you some of that cash you need. There are grants out there, and Jackie is very, very familiar with the grants, as am I. There are city, state, county, lots of different products out there. There are secured loans. So I've had people who own a car get a loan on that car. I've had people put up a stamp collection. I've actually had them sell a stamp collection and a coin collection. And I actually had a client who sold some U.S. savings bonds. They had a shoebox, Jackie, full of U.S. savings bond. They forgot about them. And,
wow.
And they, it was like $8,000 or $9,000, and they were like 20 some years old. So there's lots of ways. Now you see on here, seller help towards closing. And that really can happen depending on market circumstances. When there is a seller's market, as Jackie said, is when there are more buyers than there are homes for sale. That's probably a little bit more challenging to do when we're in a buyer's market, which means there are a lot more homes for sale than there are buyers looking to buy them. That may be more realistic. And again, so, we have to look at the circumstances and the timing of when you're ready to give you that best advice. So here's another myth. I can't buy a home because I had some credit issues. Well, probably you and the rest of the world have had credit issues. It's very, very common. And right now, the credit standards have eased. That ebbs and flows. Sometimes they get a little tougher. Sometimes they get a little bit easier. Right now, they're pretty flexible. I just settled a loan for a client, sweetest, nicest lady. She had a bankruptcy and a foreclosure all within the last 2 years. Actually, the foreclosure was less than 2 years. And the reason for it was because she was married. Her now ex-husband decided to take up the hobby of crack cocaine and heroin and basically left her with a huge mortgage payment. And when I say left, he left. We don't know where he is. And he might be dead, God forbid, or he might be in jail. We honestly don't know. But he left. He lost his job. These were extenuating circumstances beyond her control. They made a mortgage payment when each of them was making six-figure income. Well, when you cut that income in half, it's hard to pay the bills. So she got herself reestablished. She's back on track, and we were able to get her approved. She did not have perfect credit. Her score was like 618 or 619, if I recall. So anything is possible is my point, folks. Sometimes that block is in your head and not necessarily what the facts on the ground may be. So, why is my credit score different than what I see online? And will you running my credit report hurt my scores? Folks, these are the two biggest questions I get almost all the time. So let's address each of them and get them out of the way. And I'm going to give you some tidbits here. Number one, when a mortgage lender checks your credit, it does not hurt your credit report. And you can actually have multiple mortgage companies check your credit within a 30, 40-day period. And the credit bureaus understand you're not buying 4 or 5 houses, right? So they will treat it as one pool. Now, you also need to understand that there are 3 scoring models for your credit. There is a scoring model if you are applying for a store charge or a credit card. There is a scoring model if you are applying for an installment loan, like a car or a school loan or a personal loan. And there is a scoring model if you're applying for a mortgage. So if you go to Credit Karma or you go to MyFICO or you go to TransUnion, Experian, Equifax directly, that score you're getting is a credit score. It's not wrong. It's just based on a different scoring model than we as a mortgage company will be using. So I just want to clear that up. I also, I forgot to mention something. It just dawned on me. When we were talking about down payment and we were talking about closing costs, some of you are trying to coordinate when your lease is up and how to be in a situation where you don't have to make a mortgage payment and pay rent. So I want to give you just an example. Let's say, let's say it's August, okay? I'm just picking a random month. Let's say it's August. If you settle on your new home at the end of August, your first mortgage payment would not be due till October 1st. So you do not you want to make sure that you and Jackie and I, that we coordinate this so that it can be structured where you may not have to make 2 payments. Is that right, Jackie?
Absolutely. Many people don't know that you have basically, it's almost like a 1 month of grace period. So we can coordinate to make sure that you don't have to make both payments, a mortgage and a rental payment. Yes, absolutely.
So I thought it was just worth pointing that out. Sorry, I should have pointed it out sooner. So I'm not going to spend too much time here, but even if you've had a bankruptcy, even if you've had a foreclosure, even if your credit isn't exactly spectacular right now, there are ways to fix it. And one of the fastest ways to fix it, by the way, is if you have a credit card. One of the big factors, 35% of your credit score, is what's called utilization. And so you want to be in a situation where if you have $1,000 credit line, never, ever, 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 and I know this is going to sound terrible, but I mean never, ever, let your balance go above $300. Don't charge $900 and say I'm going to pay it all off when the bill comes. Never ever go above a third. Never ever let it go above 300. And not a good time to start inquiring about new credit cards. That will lower your score. If you have medical collections, and they're minor, meaning they're not like tens of thousands of dollars, I'm going to tell you to ignore them because we don't care. And another mistake I see people make with credit is oftentimes they close accounts they're not using. Never, ever, ever close an account, because part of what makes up your credit score is also the age and type of credit. In fact, I told a client yesterday, I know he thinks I'm crazy because I could just hear it in his tone. But yesterday I told the client I wanted him to go to the grocery store and fill up his tank, his car with gas today, because he hasn't used his credit card in the last 9 months and his score is sinking because of it. So I said, don't go out and buy a new TV, but I do want you to go fill up your car and buy some groceries. So, it's very important that you kind of keep things flowing. So again, one of the reasons people rent is because we've talked about credit, we've talked about assets, we've talked about you don't have enough money, your credit may not be perfect, but a lot of the time people just don't think they can afford the payment. And so, if you heard people say it's buying a home's good for your taxes, and I'm just going to tell you, and I'm going to speak for you, Jackie, if I may. Jackie and I are not accountants or attorneys or financial planners, so we're not giving you accounting, legal, or financial planning advice. But I want to share something with you that's helped so many of our clients just kind of be comfortable and bridge the gap. So just think, folks, if you've gotten a huge tax refund, are you happy or are you sad? April, May, June of almost every year, you can walk outside and you'll see people with like a dumb smile on their face. They can't get rid of it because they just got a big check. Okay. And so most people are very, very happy when they get a refund check. But the problem is, and let me ask you all a question. Would you give me $5,000 if I promised next year, and I'll sign it in writing for you, you're going to give me $5,000 now, and in 18 months, I'm going to give you back $4,500. Anybody want to do that deal? Of course not. That's silly, right? But that's exactly what you've done. And inflation, coincidentally, is running very high right now, okay? The government the problem with you getting a refund, people say it's forced savings. Well, you wouldn't put your money in a bank where you put in $5,000 and they gave you $4,500 back, would you? I wouldn't. So, the government's had your money all year. They paid you zero interest. But if inflation is running at 5%, that means every dollar now is worth 95 cents when you get it back. And even worse is looking for a home. No one wants to buy a home that's over their means and uncomfortable. And I'm not suggesting you do. I never want to see, and Jackie doesn't either. We don't want to see you buy a home where you have no furniture and you're sitting on the floor eating ramen noodles on a cardboard box. That's not good. Okay. But what's worse? What's worse is buying under your ability and hating where you live. That's horrible. That really is. That's just as bad. And so we
Yep,
want to be in the right place. Right, Jackie?
absolutely.
And so I'm going to share with you something very quickly, and then we'll move on to another topic. But think about this. You did a budget. You either did it in Quicken or Mint, or you did it on a piece of paper, or you just did it mentally. And you start with what? Here's what I bring home, right? And I have a car payment. I have to pay insurance, utilities. I like to go out. I like to eat. I like to wear clothes. I have other entertainment. And at the end of the day, in your budget, you say, most I can afford is $1,000 a month and be comfortable, right? You said you don't want me eating ramen noodles on a cardboard box. Well, 1,000 is what I can do. But see, here's the thing. If I gave you $300 extra in your paycheck every month, well, you really could pay $1,300 a month, couldn't you? If you are looking on the left side and you say, I can pay 1,000 now based on what I bring home, and if I let you bring home another 300 a month, well, you could pay 1,300 and it would only feel like 1,000. And so what I'm telling you is, instead of letting the government hold your money all year, why not change your withholdings and get that money coming back to you every month? You do that, folks, with a document called a W-4 form. And at the end of the year, when this is done with an accountant's guidance and done correctly, at the end of the year, you don't owe any money and you don't receive any money. Or you might owe $100 or you might get back $100. For so many folks, it makes all the difference in the world. And when we speak during our free no obligation consultation, if this is a little fuzzy, I'm happy to go a little bit deeper with everyone. So let me ask you this question. Again, if you're driving, pull over. This is going to shock you. Okay. If you're standing, sit. This is really, really very, very cool. How about if you had a property and someone else made your mortgage payment for you? Would you love that? Type in the box, yes, I would love that. Look at all these yeses. Okay, good. So if you would like to learn how to have someone else make your mortgage payment for you, you came to the right place. And I guarantee you, you're not going to hear about this anywhere else. So you could buy a more than one unit home. You could buy a home that has 2 units, 3 units, all the way up to 4 units. And the pros of this is FHA will allow you, as long as you're going to live in one of those units, to put only 3.5% down. A veteran or reservist can do it with no money down. Your tenant's rent might allow you, and it should allow you, to cover your entire mortgage payment. You may be able to use the existing rental income to qualify, and there may be tax benefits that you can take in addition to your current mortgage and interest expenses. See, those other units are treated as investment properties. I can't tell you how many clients Jackie and I have, and they're caught in like this HGTV nightmare world, right? They don't know if they should, right? Excuse me. They don't know if they should buy a house to live in or buy a house to rent. They just don't know. And so why not do both? Why not kill both birds with one stone? So let me give you an example. I'm doing a loan right now for a lady who on her own would only qualify for about a 250 mortgage. And she just bought a $400,000 house. So that sounds like I'm a magician, right, Jackie?
Absolutely. You are a magician.
There you go. So thank you. So, here's how we did it. She bought a 4-unit property. Her mortgage payment is going to be $2,800 a month. Okay, that's more than she qualifies for on her own. But follow me. There are 3 other units in that building. And so it's a 4-unit building. Her mortgage payment, $2,800. Unit 2 rents for $2,000. Unit 3 rents for $2,000. Unit 4 is a very small unit, rents for $1,000. So let's do the math. She's bringing in $5,000 a month on the other 3 units. We can count that income to qualify her for more home. But this is just hors d'oeuvres, right? You ready for the main course? And we're going to have dessert too, by the way. So she now gets $5,000. That means her mortgage payment is paid for. She's living for free just from the rental income, right? But it's better than that. So if I take $5,000 and I subtract off her mortgage payment, that's $2,800. What does that leave her with, folks? $2,200 a month in extra income. She's earning, you ready? $26,000 extra. She has no mortgage payment as long as those units are all rented, and she's got another $26,000 a year to do with whatever she feels like. And that's the main course. Let's give you dessert. For dessert, she gets a huge tax write-off that shelters a lot of that $26,000 because the other 3 units are investment properties and she can depreciate them. So it's a win-win-win. It's like the trifecta, right? But with everything in life, there's cons, right? The con here is you now are the landlord. You will have other people living in the same property that you live in, but if you live in an apartment building, you have that already, right? Jackie will make sure, and it will be in the contract, that the property is zoned correctly. And just being transparent and fair, you are now the one responsible when the toilet breaks, right? When something goes wrong, they will call you and you will have to make those repairs. This is, you might want to Google it, how to have your tenants make your mortgage payments for you if you go to the WBAL TV YouTube channel. So, has everybody, I hope, gotten at least one big idea so far? I know Jackie and I have been sharing some pretty big ones with you. So, and we have a special, by the way, folks, you want to stay here till the very end because Jackie and I have something very, very, very big for all of you and something that I think each and every one of you are going to want to take advantage of, but you got to stay till the end. So
we're saving the best for last.
There you go. Absolutely. And so, there are different types of lenders. I have clients say, well, I called 3 companies and everybody gave me a different answer. Well, that's frustrating, isn't it? But why is that, right? Well, there are 4 different types of companies. There is a mortgage banker that's independent. That's what we are. A mortgage banker basically is a direct lender. They're lending you the funds, and then the loan is generally sold on the secondary market to Fannie Mae, Freddie Mac, FHA, VA, USDA. There are bank-owned mortgage bankers. So, for example, Wells Fargo decided to get into the mortgage business, and they created a subsidiary company called Wells Fargo Mortgage. They're Bank of America, PNC. I mean, we can go on and on with the names. Then there are small bank portfolio lenders. And a small bank would be like in our area, a Rosedale Federal, Rundle Federal, Shore United. These are very small, 1, 2, 3, 4 branch type institutions. And then there is a mortgage broker. All will have different rules. All will have different standards. In my opinion, right now, the independent mortgage banker has the most flexibility, and probably will provide you with the highest degree of service. So the big misconception is, I have clients tell me all the time, I have $3,000 in CQ, and I know they're going to give me a better deal. Well, here's the reality. They may, and certainly it's worth checking with them. But if you have 3,000 or 30,000 or 300,000 in the bank, you may or may not get a special deal. I'm sure every institution wants to take good care of its clients. But if you have 3 million or 30 million or 300 million in Wells Fargo, it's very likely you will get a special deal because you will have a private banker. You have to understand that you're not really dealing with the bank, you're dealing with their mortgage company, which is a subsidiary of the bank. So here are some pros and cons. Again, I think the independent mortgage banker is the better way to go. That's my opinion. Here are some success stories. I can tell you anything I want about myself, but here's some things that the Baltimore Sun and the Daily Record had to say, and what some of my clients have to say. So I certainly hope that I have an opportunity to speak with each and every one of you on here and, talk about your specific questions and your specific situation. So, we talked a lot already about some great ideas, how to have people pay your mortgage for you and make some money. I mean, that's crazy. We've talked about credit bureaus. We've talked about lots of different things. So I want to share with you right now before I wrap up. And remember, you want to stay here till the end because Jackie and I put something very, very special together for you. And I'd hate to see you miss it. Let's talk about some of the mistakes to avoid. Mistake number one, and I'm going to ask you, I've already asked you a couple crazy questions, right? Let me ask you another crazy one. Who on here would give me $1,000 if I promised in writing never ever to give it back to you and cause you severe emotional distress? Nobody, right? I mean, you'd have to be crazy. So why do I ask you that question? Because sometimes people want to buck the system and they go online and they see a house and they're going to go to open house and do all of these things. Well, first of all, in this market we're in, you really do owe it to yourself, actually in any market, to get yourself pre-approved and know what your comfort levels are and know what price ranges Jackie should be showing you, and what programs are going to best be suited to your situation and how to structure the transaction correctly. But here's the thing. If somehow you sneak through and you buy a home and you have not gotten pre-approved, and you will pay for an appraisal, you will pay for inspections, it's about $1,000, and you will never, ever get that money back. And it will cause you emotional distress. It just does. So the first step in the process for sure is making sure that you get pre-approved. And that means something a little bit different than pre-qualified. I'll explain that in a minute. It costs you $0 to get pre-approved, but it makes all the difference in the world. And sometimes it's a matter of getting your deal, your offer accepted or not accepted. So what is the difference between pre-qualified and pre-approved? Here's what pre-qualified is. Hi, where do you work? How much you make? It's funny, actually, when you think about my job, here's my job. Hi, how you doing? How much you make? How you pay your bills? How much money you got in the bank? Oh, very nice meeting you. That's kind of awkward, isn't it? but those are the questions that we're going to ask. You can fill out something online, or you can speak to a loan officer by phone, and that's pre-qualified. Everything you told me sounds good. But what's pre-approved? Pre-approved means we've run credit. We've run you through an automated underwriting system. We have seen your W-2s, pay stubs, bank statements. We've run a full credit report. And you actually have the money sitting here waiting for you to find a home. And if you're concerned about rates going up, I can actually protect your interest rates while you're shopping. So when we have our consultation, ask me about that. Write that down on the notes you've been taking. So here's what we need. If you can, take a screenshot of this. Okay. Mistake number 3. I personally feel that, especially if it's your first time, and even if it's your second or 50th time, that this is still a business where you need to have your questions answered. You need to have your options explained to you. And oftentimes an online lender cannot and will not do that. Here's some personal success stories. The first one's a perfect one. You took the time to explain what was expected of me. You really helped make the process a lot easier than I expected. The communication between us made me feel very comfortable. Folks, that's the key. Okay, and you can see all of these here. None of these were paid participants. These were all clients that we actually helped get into a home. We've talked about this mistake, which is not knowing your credit score. Now you know how important it is to have the mortgage company check your credit, that it's different than what you'll see. So many times I have people say, oh, well, I know my credit score. Well, yeah, you do if you're applying for a credit card because you used Credit Karma. But our credit score is going to be a little bit different. So very important for you to understand. Let's talk about the next issue. And, I want you to just say to yourself what I've been telling my wife for the last 30 years. Ugly is the new beautiful. Okay? Ugly is the new beautiful. Folks, there's an enormous opportunity out there to find a ugly home and renovate it. We are the leader in the United States of America. We do more renovation loans than any company in the United States of America. And you can find, think about this. Jackie can show you the ugliest house in the nicest neighborhood. And guess what? You get to choose the cabinets. You get to choose the granite. You get to choose the metal appliances. You get to choose the color of the paint, the carpet. You get to choose if you want a deck outside. You get to choose the upgrades to the master bedroom and bathroom. And oftentimes you will find these homes below market. You will be able to customize them to your tastes all in one loan at attractive interest rates. So instead of looking at new construction, this may be a very, very viable alternative. So don't avoid ugly. That's a mistake. So you might want to take a snapshot here. This is my information. Again, in just a short while, we're going to share something really big with all of you that's unique to Jackie and I. So don't just jump off yet. Stay with us. We're almost done. I thank each and every one of you. If you have questions, type them in the chat box. We'll be more than happy to get back with you. And I'm going to turn it over to Jackie. Again, I thank you all for being here with us today.
Well, again, thank you all. I'm very excited to see so many attendees today, and I'm more than excited to show you what we have in our next slide, which is we have a program that is limited time program that if you take action, well, first of all, take a screenshot of my contact information, and especially to that website right there, that is the Calendly calendar, to book a 30-minute call with me just to go over the home buyer process. But and the next slide, take a picture, please, right now. I hope that you're not driving, but take a screenshot. And I'm looking forward to talking to you and to walk you through the whole process. And here is the surprise. We have what we call a VIP home buyer program, VIP certificate that entitles you to up to $2,500 in savings. I know you are probably wondering, oh, my accent, and I speak Spanish, so I'm very well connected to very great contractors that can help you save money in any kind of improvements or any kind of your needs. But besides that, I'm connected with my wonderful contractors. Whether you're for your home inspection, you're going to be saving money for your pest inspection, junk removal, whatever need that you have when you purchase your new home, we can help you save tons of money. And we have this fantastic, and Brian can let you know a little bit more about the vacation, free vacation. But we also offer, and there's no other realtors offering this, we offer a free 1-year warranty up to $700, and all these benefits that you will get $2,500 in savings if you work with Brian Sachs, and myself for the purchase of your next home. So it's a limited time offer that we have, so don't miss out.
You know, this is really, it truly is very unique and very special. When we speak, we can certainly talk to you about the free vacation offer that we offer. We didn't put it on here intentionally because sometimes our competitors sneak up and try to get in and find out what we're doing. So we will speak with you about it when we speak with you. I believe the link, everyone, is right now available for you to simply click on. If you look, you can click on it and you'll go right into Jackie's calendar. Again, there's no pressure. Jackie and I will give you a free, no obligation consultation. We truly care about our clients, as I'm sure you can tell by now, and want to make sure that everything is done correctly and comfortably for you. And why not think about what you go through in a day, in a week, to make $2,500. We have the connections. Jackie, I should say, not we. I should say Jackie, because Jackie is the one.
No, we have it.
Fair is fair, that has really great resources and tools for you. And she's worked very hard to make sure that you're provided with up to a $2,500 value when you use our services. So I hope everyone's walked away from here with a greater understanding. Again, I'm going to kind of wrap up where we started, and that is, you really want to make sure that you have a no obligation consultation with us so that your situation, your concerns, your comfort levels are all addressed. And it really is a perfect opportunity to purchase a property. Great timing. And Jackie and I certainly will do everything in our power to make it a smooth and happy, situation for all of you. So Jackie, I'm going to let you wrap it up. And again, thank you all for being here.
Thank you, Brian, too. And thank you all again. And I know this is a time that you have to think about your future and about investing in a home. And there are so many realtors to choose from. But you can go ahead and even Google my name, and you can see the referral, the feedback that I have for my services. I have earned those feedbacks. They love what I do because I do care, and it might sound like a cliche. Oh yeah, I love helping people, but I do. I love what I do, and I do it from the heart. I love seeing the happy faces. You can see many of the happy faces of my clients on my Facebook page, on social media, and because I do it from the heart. And when I do it from the heart, it comes back to me because you refer me my clients refer me to everybody that they know. So that's who I am. So I'm genuine, and that's one thing that is very different from many other realtors. I'm genuine, and I like to help, and I like to see my clients happy. So looking forward to helping you, and team up with us. Brian and I can make your next move beautiful and smoothest.
Okay, thank you all.
Bye.